Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, we're dissecting Apple, ticker Apple, a tech giant constantly navigating a dynamic landscape of innovation, competition, and regulatory pressures. As of July 23, 2025, Apple is certainly at a critical juncture, facing both significant opportunities and headwinds. Let's start by looking at the recent news flow shaping investor sentiment. On the regulatory front, there's a mixed bag of news. Britain's competition watchdog is intensifying its antitrust probe, proposing to give Apple and Google strategic market status in mobile ecosystems due to concerns about mobile internet browsers. This is a significant bearish overhang, suggesting potential operational restrictions or fines down the line. However, in positive news for Apple, EU antitrust regulators are likely to approve changes to its App Store policies, potentially allowing the company to avoid hefty daily fines and offering lower fees for small businesses. This positive EU development provides some relief amidst the broader regulatory scrutiny. Shifting to product and service updates, Apple recently introduced AppleCare One, a new subscription service covering multiple devices for $19.99 per month. This marks a strategic move towards increasing recurring revenue, a bullish factor for long-term investors. However, a key point of contention and market uncertainty remains the debate over whether Apple will release its AI model as open source. This decision could significantly impact its competitive standing against other tech giants, especially considering Apple has been the second worst performing Magnificent Seven stock year-to-date, with some analysts attributing this to concerns about its AI efforts. Despite these challenges, Apple's App Store revenue is reportedly surging, showcasing the underlying strength of its service ecosystem. Analyst consensus remains largely buy, with an average price target of $237.36, implying a over 10% upside over the next year from current levels. However, this bullish outlook is tempered by broader concerns about slowing growth and potential impacts of trade policy. Other news includes Apple's online store launch in Saudi Arabia and a $500 million investment in its U.S. supply chain, both long-term positive developments, alongside a minor leadership transition with COO Jeff Williams transitioning his role. Now, let's turn our attention to the charts to see how these fundamental factors are reflected in AAPL's price action. We'll begin with the daily chart, spanning from March 2024 to the current date of July 22, 2025. Observing the overall trend, Apple experienced a significant uptrend from March to mid-June 2024, climbing from the $170 range towards $220. This strong move, particularly the sharp spikes in June 2024, likely correlated with early excitement around Apple's AI initiatives, possibly during WWDC. However, as we noted from the news, these AI efforts have since become a point of concern, leading to some relative underperformance. Following that initial surge, Apple entered a period of consolidation and correction through late 2024 and early 2025. A notable event was the sharp drop in January 2025 from highs near $240, followed by a strong rebound. However, the most compelling price action occurred in April 2025. We can see a significant V-shaped recovery, where the stock plummeted to a strong support level around $187.34 and then bounced back sharply to the high $190s. This $187 to $190 zone clearly acts as a critical long-term support, representing a key level where buyers stepped in aggressively. Looking at the more recent price action, from May to July 2025, Apple has largely been trading sideways within a range, fluctuating between approximately $195 and $215. The price is currently at $214.40, the close from July 22nd. Let's switch to the 1-hour chart to examine these recent movements with finer detail. Here on the 1-hour chart, we can see the short-term volatility clearly. Notice the sharp pullback on July 7th, where the price dropped from highs near $216 to approximately $208. This was quickly followed by a recovery in the subsequent days, showcasing buyer interest around the $208 to $210 level, which now acts as immediate support. Further refining our view, let's zoom into a specific period on the 15-minute chart to identify crucial intraday levels. We're looking at the period from July 21st, 11:58 Universal Time Coordinated through July 21st, 23:58 Universal Time Coordinated. Observe the robust upward momentum that began on July 21st, particularly between 13:13 Universal Time Coordinated and 13:28 Universal Time Coordinated. The price surged rapidly from around $212.28 to $214.55 in just that 15-minute window. This suggests a strong burst of buying activity, likely triggered by a positive news headline or significant market order flow during trading hours. However, the stock could not hold these intraday highs, indicating potential resistance just above $214.50 and settled back to $212.48 by the daily close. Returning to our daily time frame, let's identify the most important price levels to watch. For immediate support, the $210 level is crucial, as seen in the recent bounces on the hourly chart. Below that, the strong historical support zone around $187 to $190, established during the April 2025 V-shaped recovery, is paramount for any long-term bullish thesis. On the resistance side, Apple is currently testing immediate resistance around its July 22nd close of $214.40. Beyond that, the June 2024 peak around $220 represents a significant psychological and technical barrier. The all-time high in our provided data stands near $260 from December 2024, which serves as a long-term target for sustained bullish momentum. So, are we bullish or bearish on Apple? In the short term, Apple exhibits signs of consolidation, trading within its established range of $195 to $215. A bullish breakout above $215, reinforced by sustained high volume and positive news on AI developments or favorable regulatory outcomes, could signal a move towards $220 and potentially the analyst target of $237. The likelihood of this scenario is moderate, around 60%, largely dependent on clarity regarding its AI strategy and resolution of UK antitrust concerns. Conversely, a break below the $208 immediate support, especially if accompanied by increased selling volume and negative news, could see it retesting the major $190 support. This bearish scenario has a moderate likelihood of about 40%, particularly if broader market weakness or persistent AI skepticism weighs on tech stocks. For long-term investors, the analyst consensus of buy, with a target of $237.36, offers a compelling outlook, suggesting potential for continued growth. The company's strong services revenue, especially the App Store, and new initiatives like AppleCare One, underpin this optimism. However, significant challenges remain, particularly regulatory risks in the UK and the need for Apple to prove its competitive edge in the burgeoning AI space. The market will be keenly watching for any announcements about future product cycles, particularly the next iPhone and any AI-centric hardware or software, as these are historically major catalysts. To summarize the key levels, immediate support is at $210, followed by strong support at $190. Immediate resistance is around $215, with a more significant hurdle at $220. The analyst average target is $237, with a high of $300. Keep a close eye on regulatory headlines and any new details surrounding Apple's AI strategy, as these will likely dictate the next major move for Apple. Remember to always conduct your own research and consider your risk tolerance before making any trading decisions. Thank you for tuning in to Explain the Charts, and we'll see you in the next video.